Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks, and I got two more stocks for your aggressive growth radar screen. Normally, I have a good topic. This one is making me hungry. I'm very hungry, so let's get right to it, shall we? All right, our first stock is the Cava Group. Cava Group right there on your screen. C-A-V-A is your ticker. It's a Zacks rank number one. That makes it a strong buy. It's got an A for growth, as just about all of my aggressive growth videos have, and an F for value. And you know that I love to see that divergence. It tells me right away that I am on the right path, as growth investors and value investors are inherently looking at different things. We're going to skip down here to our chart, and we can see a nice little run up of beat, as we see from that green arrow, and then a nice continuation after a little bit of profit taking. We have a $10 billion market cap, so we're a pretty good size restaurant. I don't know. I've never been to a Cava, but their Mediterranean casual fast dining group is based in Washington, wherever Washington that is. That's probably Washington State, I'm going to guess. All right, let's look at the numbers as we always do for all of our stocks. So first off, are you beating the number? Mega beat. Very large beat, but improving and a very big beat. And we can see this quarter might be an aberration there. We're looking 3 cents post 21 cents. There could be some carry forward from an IPO sort of deal right there. A loss turns into a gain, an expected loss post a gain. So that's very good to see. The gains came in a little bit. It could be a seasonally weak time. I don't know. Do you want to eat Mediterranean food in the winter? Maybe. But things are picking right back up here. So we see 12 cents this most recent quarter. So good earnings profile there. Let's take a look. Are your estimates moving forward, moving ahead? So this quarter has moved up from 11 cents to 12 cents. Next quarter's holding still at 9 cents. The full year has gone from 24 cents up to 34 cents. And next year goes from 32 cents to 46 cents. Estimates improving, so that looks good. We're going to take a look at our sales growth. We're looking at 24% this year, 20% next year, and we're going to cross that $1 billion threshold in sales. Always good to see. So we are growing at a fast clip here. How's our valuation? Well, big growth. 27% in the most recent quarter on a year-over-year basis ends up giving us a massive 258 times forward earnings multiple. Now, keep in mind that we were just earning pennies a little bit ago, so let the earnings catch up to that, and that number should fall dramatically. 17 times price to book, and that's what's keeping all of the value players away. 13 times sales is pretty good, but when we look at the margin profile, go from losing money to 1.8% to 3.7% and heading up. As you bring in more sales and increase margins, earnings will move higher, and when earnings move higher, stocks tend to move higher. So we can see from this chart, it's a relatively new stock. We only have the 4 reports, all beats. We have the IPO, a little retracement, and then straight off to the races. Are we overvalued here? I don't know. If we can keep on posting big beats and we get those keep margins moving higher, then we won't be overvalued. But if margin growth diminishes, we could be in for some trouble. So Cava Group, it is definitely one name to keep on your aggressive growth radar screen. It's CAVA is the ticker. All right, I'm hungry for more. That means we're going to go to Vital Farms. Vital Farms is the name of the next stock that we're going to look at, and it's VITL. That's the ticker. It's a Zacks rank number one strong buy at A for growth, F for value. Already gave you the spiel there. Look at this chart. We're just grinding higher. We post a nice big beat. We move up. We continue on the grind higher. And now a little bit of profit taking, which should pique the interest of people that love charts, because now is this a time to be a buyer? We moving up here, things good. All right, so obviously this is a food stock. We're looking at a $1.7 billion market cap. And why don't we skip on down the line here, and we can see that this is eggs, including eggs, butter, hard-boiled eggs, ghee, and liquid whole eggs. So egg prices, I don't know about you, but the price of eggs that I have seen have doubled in the last year or so. Maybe I'm buying the best eggs ever. Maybe I have a direct connection to the farm. I don't know, but prices for eggs seem to be very high. And I like to have eggs in the morning. I'm that sort of guy. I'm a big egg guy, as they would say, as the kids say. Big egg guy. All right, are you beating the number? Beating it handily here, beating it handily here. Still a beat, not quite as big. We're getting back up to the big beat cycle, and we can see just in the last 3 quarters, 10 cents to 17 cents to 43 cents. Earnings are accelerating, so that provides the basis for that chart moving higher. How about our estimates? What are they doing? They're going from 21 cents to 22 cents. This is 16 cents to 14 cents. We're going to put that as a downward. But on the full year, 77 to 94, and then next year, 98 to $1.13. Those are very, I'm going to call that A minus, because the annual numbers are more important than the quarterly numbers. There could be shiftings of some pennies. That could have been the thing that happened here. All right. Are we growing sales? You got to grow sales unless your costs are going to zero. All right. 22.5% top line growth this year, 16% next year. You have to start to wonder how much inflation has been dealing with that. And is there going to be a deflationary event ever in the price of food? Ever again? Food prices costing restaurateurs quite a bit. All right. Our valuation, 44 times, is a big multiple for someone bringing in 24% top line growth. Only 8 times book for this sort of thing, and 3.5 times sales. And here is our margin profile: 4.5 to almost 5.5 to almost 7.5. Margins moving up. I like that. So that tells me this could be a good time to be buying the stock. And as I just glance at this chart for probably the second time in as many years, I can see that we'll do our whole thing. All right, so we're all going to die, but stocks magically rally higher. Probably all that QE things retrace back down to around $10, and now this stock has just gone vertical. But we do have the earnings estimate trends, in that near 45-degree angle that we like to see. And the thing that I also notice here is the gap between the spaces here, between the earnings estimate lines. And that tells me that there is growth in earnings. And I can see that when I see a chart like this. I see, this has obviously been held back for quite a while, and now it's really catching up. Anytime there's a dip, I would like to be a buyer in that 37.5 range in here. But, you want to keep this stock on your radar screen. That's why we do these videos. Keep these things top of mind in your aggressive growth radar screen. All right, that's it. It's Vital Farms, VITL. That's it for this week. Be sure to join me next week when I have 2 more stocks for your aggressive growth radar screen. But until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.